Just when you thought it couldn't get any weirder, it does. So in front of us, 5, 20, 50, 200. I have to go through this one. Percentages of names above their moving average. So how many names are above on the S&P 500? So here you would have a certain percentage, certain percentage, certain percentage, certain percentage. You'll note that the 5-day is doing something weird with the percentage. I have to flip it over, but for time's sake, we're just going to rock and roll here. The most important thing about the 5-day and the names that are above or not above is we know that up in here, these are in the 80s, and then down here, you're roughly in that 40% area. It's super important for us to understand this. Why? Because we're not overbought here at all on the 5. And actually the 20 turned up today, even though it really didn't feel like it. But when we start going through some of these sectors, you can really see it. Now, in regards to the 50, it lifted. The 200's trying to get through as well. As weird as today was with the trading and the backing off at the end of the day, which we're going to get into, I think that this is pretty healthy and we are seeing some rotation. Now, this could be the energy names that are doing it, but I was pleasantly surprised and I wanted to wait for this before I actually recorded this video. So that's why it's going out a little bit late today. As always, subscribe to the channel, click all notifications. You're not going to get cool graphics today because we got a bunch to go through. Let's get to it. In front of us is the McClellan Summation Index. And why is this important? Well, when we're holding this zero line, it's exactly where we want to be. And you can see it from here. And I'll open this up a little bit so you can actually get a better view of it. And what's so important about it? We're holding that zero line. In other words, we came to the zero and we held and we flipped up and we're going sideways. So we're still holding in there. It does feel heavy by today's actions, but was today's actions more buying or selling, or was it just light volume? And that's really the question that we have to ask ourselves, because when we look at stuff today, you're like, okay, well, we didn't break out. We had a ton of failed breakouts today, like a lot of them. We're going to go through a couple of them and what they tend to mean. And we do have some froth in the market. Maybe we should go through that too. But more importantly, we're holding in here, but we're not getting through those core levels. And we all know FOMC's on Wednesday. But in front of us is Fed Watch Tool. And we have circled here on June 18th. Anyone can go to this. It's actually a free site. You can actually just type in Fed Watch Tool. It's done by CME. It's free. I suggest you watch it because then instead of guessing what is going to happen with interest rates, you can actually know ahead of time. And then it's just really a question of itchy speech. So no change, 99.8% chance. There's no chance that anything gets done. Should he cut, the market will probably rip on it. I think that would be the initial reaction, but nobody sees it. So we don't really have to worry about that on Wednesday. That's the first thing. Now, what I think is super important about what's in front of you is this is from the Wall Street Journal. And if you type this in every single day just for free, you can go Wall Street Journal, advanced decline, and it'll pop in this diary. And they put it out every day literally for free. And it tells you a lot more than what you're probably trying to decipher on your own, I guess is a real nice way to say it. So here's the New York Stock Exchange. And I'll tell you what's today's close, and then I'll tell you the previous close. And I'll tell you where you are a week ago. So one of the things you can do with advanced decline, you can just kind of eyeball it yourself. If you had this amount of issues traded, you're going to have the same amount of issues traded every day. It's like 3,000 issues, right? Let's just call it 3,000. So if you came here and you said, okay, for every issue traded, 1,900 advanced a week ago, on this day, and 800 declined. And then you come to here and you look at this Monday and you see 500 advanced and 2,200 declined. Well, we can look at the 5, the 22, and all of those. But what that just might be is that some on the 5, for example, are just staying stagnant, right? And they're not dropping while others are going up. So that would mean that you could still have false breakouts and that those names could still go up. But what names went up versus down today? Well, this ratio right here, if you just eyeball it, take this, divide it by this, you're going to get roughly 4 to 1, right? Roughly. And so if you look at it that way, that's not great. And really what you're looking for is for exhaustion, for like exhaustive selling, you're looking for 9 to 1. You can just write that down somewhere and remember it. But you're looking for like 9 to 1. So then you look at Friday and go, well, how were we Friday? And then you would say to yourself, well, Friday was 1 to 1. I know it's not, but we're close enough. On the week, how did we do? Well, the advanced decline on the New York Stock Exchange got worse, emphatically got worse. And then today it got worse versus Friday. These are the facts. So these are things that we have to look at and start paying pretty close attention to going into FOMC. And I think he's got some real issues ahead of him. If you take a look at the advanced decline line and then you take the volume, like the advanced decline volume, which is right here, and you're like, well, that's really not that bad. And then you're like, well, the advanced volume was 276K. We're just going to call it that way just to make it simple. And now you're at 493. Just take these numbers, right? So that you don't go nuts. And if you look at those numbers, it's pretty obvious what happened a week ago versus what happened today on the advanced side. Now take a look at the decline side. 852 to 196, 485 to the 46 to the previous close to where you're at now. So you are 4x where you were a week ago on declining volume, and you are 2x where you were. So are things on the New York Stock Exchange from an advanced decline standpoint, are they getting better or worse? Hands down, they're getting worse. Now, if you look at the block trades, and it's nicer than to break it all down, you have your advanced, you have your decline, and your total. And then you would go here and you'd go, okay, we are 3 times or 3.5 times block trades on declining, meaning they are selling. It's real clear what they're doing. Again, this is all free. But once you learn how to read it, it's simple. Well, how about from Friday with all those options? Yeah, we're selling more today, and we're about a little more than half the average volume that we were on the advancing side on the New York Stock Exchange than we were. Tells you how they're leaning going into the FOMC or how they're positioning themselves. And we can do this with the NASDAQ as well, and I think it's helpful. You just go here, all the issues you have, 46, and these are the ones that traded. Okay. And then all you do is just go advanced decline. Now, what you're looking for is called 1,003, so you're, 3.5. For every 3 that declined, 3.5 that declined, 1 went higher. Friday, you're pretty much even. And you were 3 to 1 advances to decline. So is this getting better or worse? It's getting worse. New highs versus new lows. They also give you that. And you can see that pretty clearly. 173 versus 38. 157 to 62. Where are you here? 78 to 129. Not ideal, right? So you are seeing weakness. And of course, you can do the same thing on the advancing decline side and say, here you are from the latest close. And of course, previous close was options. So it's a little more difficult on the option side. We could make that argument or not make that argument on block trades, but comparing where you were a week ago, comparing where the declining volume is 2x where you were on Friday, and it's 6x or 5x where you were a week ago, it matters. So this is telling you how they're positioning themselves, which might explain why we were a little weak today. And then we can do this and make a little bit of excuse and say, well, you know what? They're going into the weekend, or they're going into this holiday week, right? Because we have off on Friday, we have Itchy on Wednesday, and it's not what he's going to do, and it's more the dot plot. I believe we get a dot plot, it's June. It's also not only what's he going to say, because you've got continuing claims. I'll go over that very quickly. I went over it on Saturday, but I'll just point out what the real issue is and how is he going to address the dual mandate issue that he has. But there's some things that stand out here. So this breaks it down per half hour. Again, this is all free, which is to me kind of crazy, but very simple. 9:30 to 10, and here you are, and you can see this glaringly, absolutely glaring, as someone likes to say. 9:30 to 10, 121 from where you were a previous close. Where were you a week ago? 100. All right, so are you doing less volume than you were a week ago because of the holiday week, or more? More, okay? Then you come into the end and you go, all right, well, here we are at 350. Well, how about a week ago? Well, we're here. How about that Friday? Same amount of volume. You see, we're doing more volume than we were a week ago. And as we're doing more volume than we were a week ago, and almost the same volume on Friday, the advanced decline is definitely tilted bearish, and they are definitely selling more blocks than they were selling to decline stocks than they were going forward. This is completely, utterly objective, and you can do this every single day. I like looking at this stuff specifically into like an FOMC meeting, because they can't move like we move. Remember, they're the sharks. It takes a while for them to turn. We're the remora. So now that we have that basis down, we can then utilize that information and look at what happened today and build on it. So now that we have a better understanding of what's going on, what I will say is it's boiling down to individual names. And this is an area where I can do well, but I really do better in the thematic areas because I'm top down, I'm not bottom up. So in other words, top down, for those that don't know, is index. Oh, let's get rid of that bad guy. So it's index, and then after that, it's sector, and then it's stock. And then I view everything through the lens of 3, which is macro, and then fundamental, and then also that is technical. And again, that just gives me my stool, as you guys that have been around for some time love when I draw up my own stool versus giving you a meme. So there you go, there's your stool. Now, that's kind of a cheesy one, but that's what you get right now. So where I'm going with this is you can do individual names. Now, we all know that, I'm not gonna go down that rabbit hole. I'll leave it at this. So they voted tonight and they said that, hey, by the way, this company's gonna do very well because of the way this bill passed, and it just happens that a bunch of people in Congress were out there buying the stock ahead of time. And I'll just leave it at that. So you're probably gonna wanna watch this OSCR tomorrow. A lot of people in the community are already trading it. You seem kind of boxed in here and on that range, in that 5-minute range, and I would watch that. Candidly, I have no position in this. This kind of stuff I want to see, and I want to watch what happens tomorrow with it. And you're getting these other names. I'm going to go through some of the sector stuff that I see, but also something like the CRCL. When these end, they're going to be brutal. And they all end, and I want to be really clear about this. There's 2 sides to this coin. One, is this completely irrational? Yes, of course this is completely irrational. Two, if you're including rationality in the stock market, you're going to have a really bad time and your life's going to be really, really hard. And I don't know how else to say it, but there's no rationality with the stock market, right? There's rationality with institutional investors, but the idea that should be worth 50 or 150 is no different than a painting, what they're willing to pay for the painting. And if you think about it, oh, it's discounted cash flow. Okay, good luck with that. What you want to do is focus on the big things. Here is your peak VWAP. We traded this in the room today, pulled some money out of it. And from there, I just watched and then got into position and watched how it acted at this open. And then I'm actually short this right now through puts. We'll see, I've got 3 days here and we'll go from there. But this kind of stuff, when it ends, for those that want to know, hey, how would you know that this is going to end? First, I am below the peak VWAP. That's your very first thing. The second thing, this bar might as well be red. And what do I mean by that? When I go here and I get a 50% line, you see that 50%, and I can't close over it, that means I had more selling than buying that day. Super obvious to see. All I have to do is flip it down like this, make it regular, and then you can look at that bar as well and watch how you just rode the lightning right there. 3-bar pattern to the downside, and there's your crack. Pop goes the weasel goes pop. But wait, there's another way I can show you to spot these as well. Now, this is actually how I learned to trade, was open, high, low, close. And then I flipped to candlesticks because I love patterns. But this is really simple. And sometimes just flip into an old-fashioned open, high, low, close. It's pretty good because you see how you flipped over here, and I'm going to zoom into this. Here's your 50% line. See how you zoomed in over this? Now, I'm going to click off of this very, very quickly. Actually, let's clean the whole thing off. And you see where this high is? And you can always watch the highs and the levels that I point out right here. And I'm going to start doing more videos for you guys on patterns. And then you see where you're at right here and how it flips, right? And you go right to that level and then you reverse and then undercut. That's it. You know you're done. Right here, you know you're done. And so from there, you know you have the possibility of being done. I should say that. You have a high degree of probability that that's done based upon that movement right there. And sometimes you can see this stuff much clearer this way than in candlesticks. So there are times where I'll just run scans and I'll just look at the actual open, high, low closes. I don't know how I feel about them. They can do thick or thin bars, but you can even see it on things like this, like you're watching this from just an open, high, low, close standpoint. And then you can just watch it down 1, 2, 3, and you can see the turn. You don't even need the colors, quite frankly. And you can actually go here, I think, and just take the colors off. You don't really even need them. I think you just change them that way and make them high, low, close versus, you can do a lot of different things with this, actually, something to play with. I don't know how you guys feel about the colors or not the colors, but really all you're doing is just reading price and you're watching the momentum actually shift. And you can see the shift here, down 1, 2, 3, up. I find it extremely helpful, and then you're holding levels and you can just watch those levels. But everybody trades differently, but it is a way to actually just get a different, cleaner read sometimes. I do trade the candles, but I will look at that kind of open, high, low, close to go from there because I like the patterns of candles. I like understanding, oh, we're doing one of these. Oh, we flipped right here. Okay. And so to me, I just go, oh, look, bullish hook reversal or a bullish homing pigeon. All right, cool, let's go. Like, it just means that if I'm going to do this, that there's the move, there's my stop, and I have the whole thing mapped out in my head. It's much easier for me to process information faster using candlesticks, believe it or not, just because I combine it into a pattern. That's how I process it. For people that watch me trade live, that's how I do it so fast. I actually process the pattern, and I just do pattern recognition. Oh, it's one of these. And I want to talk about this. I want to talk about NVIDIA and what I mean when I say you had a lot of failed breakouts today. And this is textbook stuff. Like, this is a textbook failed breakout. Now, it doesn't mean that NVIDIA is never going higher, but this failed. On this hourly from 9:30 to 10:30, you usually get the most buying. And if you go and take a look here from 9:30 to 10:30, you had the most buying. 9:30 to 10:30, 9:30 to 10:30, 9:30 to 10:30. I'm not going to do it anymore. You've heard it enough. So what one of these kids is doing their own thing, right? What's it doing? Whenever you see, and you'll hear me say this a lot, whenever you compare and you see the 10:30 to 11:30 doing better, it's on. The high degree of probability that that's going to push through a resistance is pretty extreme. This should not have failed. And it did. So I have to understand that and look at that and go, okay, well, that's not great. Now, that's very different than saying, well, we're falling apart and the sky's falling. But when you go back and you look at the advanced decline line that I gave you, it makes sense that we failed when you start realizing that a lot of people are saying, hey, we're sellers, we're net sellers. We're putting declining volume on the scale today, not, advancing. And so you look at that and go, okay, well, we tried, we got Matumbo'd. So is that it? No, it could be his speech. But if you just remember, and I don't want to go back at it, and I'll link Saturday's video at the end of this, you really want to remember for FOMC that we're at 3-year high continuing claims. And for time's sake, that's all I'm going to say. You can go look at the chart and go from there. But you're at 3-year high continuing claims. I don't know how he's going to explain it with CPI dropping. I'll get more into it in Tuesday's video for us. But Again, subscribe to the channel because all these videos are linked. I'd rather spend our time together looking at some of these charts because I think it's super important. Now, everyone will be looking at PLTR tonight and go, I knew I should have held it to new high. You couldn't finish 50% up on the bar, right? This is concerning behavior of leadership. And you are seeing some selling on some of this stuff where even here on Meta, got over, great news, rejected. People say, well, that's a doji, it's not a rejection. On great news, you can't push. PLTR, you've got multiple wars on multiple fronts. That's what we're gonna get. And so is it that lack of buying or do we have net sellers? So my premise today was lack of buying. That was where my head was. But when the data came out at 4 o'clock and I'm able to look at that data concisely like we did, what would the answer be? It wasn't lack of buying, we had net sellers on the day. So your thesis has to change as the data changes, right? That just makes sense, doesn't it? The more input you get, the more you're going to change. If you take a look at Apple, you're just riding the lightning here right at this 196. You're unable to hold. OKLO had fantastic news. And what do? We just get another shooting star and a reversal. And I understand this thing's come a long way in a short period of time. I get it. But that might be for the whole market. And that might mean that this whole market needs a rest. These kinds of names, when they get going, they should keep going. I shouldn't be getting dojis at the top of a channel. And that does become a concern of mine. Now you have names today, for example, like Microsoft, all-time, hitting all-time highs, only to what? Back off those all-time highs. Now, am I going to call the top on Microsoft after 40 years? No, but what I'm saying is that you are starting to see lack of follow through here. And we do have that advanced decline line, so we need to be aware of that. I would say this too, if we take a look at energy names today, you're not going anywhere on the energy side. And on the flip side of that, there's a couple things here that really stood out. This is a massive reversal if we were going to be collectively in a long, prolonged war. The fact that we're at 69, 61 on crude after Friday at the close, we were at 76. Like that's something to come in that hard, that fast. And you don't even see these names really cracking. We owned Oxy from back in here. And we closed it today, but you don't see them cracking. So there's that side of it. So I think that component of it's already baked in. Meaning if the war got worse and things escalated, I personally think you're in a position here where this market could sell off. Because for crude to do that, and here's gold, and for gold to do this, and gold to come down like this, they don't seem overly concerned. Here's the dollar. The dollar can't get out of its own way. But what are they doing with treasuries ahead of this? They're selling them after the 20-year today because you had the 20-year bond auction today. And it was a dumpster fire floating down the river with a bunch of raccoons. So when you start connecting all these dots, it means that they're going to have to get higher yield. And the higher yield's not going to wait till May 26, I don't think. I don't think that we're going to get a rate cut until September, October, until we have something with tariffs. And quite frankly, I'm going to throw this out there. I don't think they're going away. I think he's going to keep them over countries' heads, and we're going to keep extending them. And I think that's going to put pressure on the dollar, and I think it's going to put pressure on the bond market. I think it's going to be an elongated issue. That's where my head is with it. But this is what's going on with the bond market. What you need to watch Wednesday, and we'll get in greater detail tomorrow on this, 451. You don't want to get over that 451. When you're trading tomorrow, and you are getting some of them that are just beasts, like this ASTS, when you're trading tomorrow, you need to see the follow through. And the last thing that you want to be is the guy that's up here holding the bag into when Itchy tries to explain why he's not cutting rates and we're at continuing claims with 3-year highs. I don't think it's going to go very well. That's it.